We have with us Sanjay Gupta, the CEO at Star Cement, joining in the show. Sanjay, hi, good morning. Good to have you on the show. Help us understand what the pricing trends are in the east and northeast part of the country, especially in the months of January and February, because what we understand is that there were some price hikes which were undertaken.
Yeah, I think in general, the prices were not, they were almost flat in the month of January. But I think in the month of February, yes, there has been a price increase of 5 to 10 rupees depending on different markets, largely in the east. And that is because these are all season months. So a trend is like that in quarter 4 onward, the prices actually do firm up. So we are seeing the similar trend continuing as of now.
Okay, so what you're saying is that after this 5 rupee per bag price hike, you see more price hikes coming in the offing in the months to come?
As I said, generally the prices actually tend to go higher in the month of February, March and April. These are peak season months. So, and there is always a demand-supply mismatch at various regional levels. So that actually spikes the prices a little bit. So we are expecting that we are going to see the same trend this year also.
Okay. What about volumes, Mr. Gupta? We understand that they did get impacted in Q3, some logistics issue as well. Are all those worries behind you? Clearly, there was some capacity connected to the Meghalaya Guwahati bridge that was capped. Are those worries now over?
Yeah, so our volume actually got impacted in quarter 3 because of, as you rightly said, because of logistical issues and some bridge has cracked. So I think the work has already been completed on those things. The traffic movement now is normal. So I think those worries are now behind us, and we hope to do a better volume in quarter 4.
Okay. And capex plans in Meghalaya and Guwahati as well. Talk to us about that. Some commercial production that started that we note it at the new GU in Siliguri. What is the current utilization level at this plant?
Right. So we just started in the last quarter. We started Siliguri grinding unit, which we have set up with a capex of around 400 crores. And as of now, the utilizations are around 35%. But we hope to ramp up that entire capacity by in quarter 4. And in FY22, we'll be fully utilizing that particular plant to a capacity utilization of around anything between 65 to 70%. Going forward, we do have capex plan in Meghalaya, also in Guwahati. So northeast, we are looking to set up a 2 million ton clinkerization plant and around 1.5 million ton grinding unit in Guwahati. We are also setting up a WHR plant of 12 megawatt in Meghalaya to utilize the waste heat generated out of cement plant. So this entire capex is going to be somewhere around anything between 1,300 to 1,400 crores. That's the capex which we are lined up for northeast.
All right. Mr. Gupta, give us a sense as to what about the outlook on your fuel mix in terms of petcoke and coal, and how the input costs could affect your overall margins?
Yeah, so as of now, the fuel prices are actually impacting the freight cost significantly. We have seen the freight cost actually moving and higher in last quarter also, and they are also continuing as of now also. Our fuel mix is largely the coal. We are not using petcoke there. So it is largely from eastern coal fields and imported coal. But even the coal prices have actually moved higher. So, but we hope that during these season months, we will be able to pass on these cost impacts which we are facing as of now, both fuel cost impact and also the freight cost which has gone up. As we are a little expecting that there will be some price increase in next 2-3 months.
Oh, okay. And what would be the quantum with respect to those price hikes?
So So I think what we have seen is that over a period of last quarter and this quarter, we have seen an impact of somewhere around 200 to 250 rupees on overall freight and fuel cost for us. We hope to pass on the entire cost increases to the consumer.
All right, we'll let you go, Mr. Gupta, on that note. Thanks very much for sharing with us the outlook on your capacity utilization, the demand scenario, as well as the margins and price hikes for the future.